Joining us now is Oppenheimer and Company senior analyst Jason Helfstein. He has an outperform on the stock with a $135 price target. Jason, good to see you here.
Thank you.
Put these things together, perhaps.
Sure.
Obviously, a lot of trimming going on. A lot of these companies hired pretty indiscriminately for a few years. They're trying to figure out the correct cost structure. On the other hand, they are going to have to make new spending efforts in other emerging areas.
Sure. I think you have a number of factors happening here. So clearly, the company hired a lot, headcount up 50% since 2019. You have an activist investor pushing for head cuts, but then you have ChatGPT. On top of that, we think if you look at the outlook for advertising, they're not in as strong a position as they should be around the shift to connected TV. And so ultimately, we think saving some money on headcount will allow them to invest in other areas.
Obviously, one of the knocks on Alphabet over the years has been a relative lack of attention to cost discipline. They want to do many things in many different areas. They want it to be, the paternalistic employer and all the rest of it. Is the street convinced that maybe has changed? I mean, I know that earnings estimates for 2023, for example, the consensus is down 20% since the middle of last year.
Yeah, I mean, you've got a number of factors, right? So you had the head count. Then you still obviously have the revenue correction, right? I mean, and there's still some concern that estimates might be too high. I think we have a YouTube estimate that's 4% below the street, for example, for the year. Yeah, look, I think there's been a lot of opportunities in Silicon Valley over the years for people to work at, startup companies, the next new thing. And so I think Google had a culture of come work here, come work with the smartest engineers, and we will take care of you. And they've really tried to pride themselves on not having to do something like this. But I think you look at every single tech company is laying people off. So, they would have been the outlier to not do that. And again, I think they need to give Wall Street some kind of answer on ChatGPT.
Yeah.
For all we know, they do have AI internally that is better than ChatGPT. There was a blog post, I think, on the 17th where they talked about their AI initiatives, outlined what they've been working on for the last 10 years. But I think they do need to show investors and the consumer kind of, what is their hand in this AI race.
Don't they also have to show that there's not potentially erosion on the advertising, the monetization efforts against search results under the, whatever AI protocols? Because it seems like right now, they're serving you up links. A lot of them are what people are exactly looking for. It's not just like AI kind of generally trying to figure out an answer to a search query.
I mean, it's definitely different. If you look at Google now versus Google 5 or 7 years ago, correct. To some extent, they're giving you the answer. Now, it may be the answer for things that they think you wouldn't click anyway, or maybe it's not as much of a monetizable search. When you think about, the high monetizable travel, auto, certain high monetizable categories. But yet there's no question that, if they just give you the answer and don't make you do some digging, it's harder to monetize.
Right.
I also think, what is just the business model? What is the business model of ChatGPT?
Right.
Do they actually start charging for G Suite if ChatGPT is part of G Suite, just like Microsoft is talking about making ChatGPT a part of Microsoft Office 365.
Sure.
So there's definitely, we have not seen how this is going to play out. But I think, and there's been a lot of reporting, Microsoft or Alphabet, they need to do probably some training around their AI to do some of the things that ChatGPT is doing, where it may not be, let's say, today ready to do that.
And then just sort of the bottom line take on the stock from this perspective, where the valuation's been compressed, quite a bit at this point.
Yeah, look, we still think, like, in large cap, it's probably the second most interesting stock in our universe. We'd rank probably Uber #1, then Alphabet. I mean, there's definitely a lot of question around what happens with Meta. That being said, Meta's really more of a cost-cutting story than a revenue story. You already got one round. I think investors are looking for more. You may not get more. So, we do like the hand that Alphabet has right now going to earnings.
All right. Appreciate it, Jason.
Thanks
Good
for
to see
having
you.
me.
Thank you.